Welcome to the Wednesday edition of Tech Stocks Daily, your go-to source for all things high-tech and high stakes in the NASDAQ arena. Today, we're delving into Apple's big moves, market share gains, anticipated iPhone 16 launch, and impressive financials. Curious why this could trigger a historical upgrade cycle? We've got you covered. We'll also unpack the legal quagmire surrounding Endava PLC and why big investors have their eyes glued to AppLovin and Shopify. From billion-dollar revenues to class action lawsuits, we've got it all. Stay tuned. This is a Tech Stocks Daily you won't want to miss. Hey tech enthusiasts, buckle up because today's spotlight is all about Apple. The tech giant has been full of headline-grabbing news, giving us heaps of juicy stories to bite into. Ready? Let's get started. Market share on the rise. According to the International Data Corporation, Apple is gearing up for a market share boost, fueled by the forthcoming iPhone 16 and some cutting-edge generative AI tech. IDC forecasts global smartphone shipments to rebound by 5.8% in 2024, and Apple is poised to ride that wave, especially in luxury segments and emerging markets. In China, budget Android phones are the rage, but Apple's high-end Gen AI smartphones are set to take a chunk out of that market. IDC expects Apple's market share to catch up in 2025, thanks to Apple Intelligence and partnerships with local Chinese AI firms. In 2023, Apple has already amped up its China game by expanding its supplier network and even opening a brand new Apple store in Shanghai. Heck, even CEO Tim Cook is schmoozing at the China Development Forum in Beijing. How's that for dedication? iPhone 16, the game changer. Everyone's buzzing about Apple's Glow Time event slated for September 9th, where they'll debut the iPhone 16. Wedbush analyst Dan Ives predicts this launch will trigger a historical period of iPhone upgrades. According to Ives, roughly 300 million iPhones haven't been upgraded in over 4 years. That's a whole lot of outdated phones ready to be swapped out for shiny new iPhone 16s, loaded with AI features designed to make Siri incredibly intuitive and useful. Ives even dropped some impressive stats. Up to 25% of the world could access AI through an iPhone. As Apple gears up for this massive upgrade cycle, they're also prepping for a leadership change. CFO Luca Maestri is stepping down on January 1st, 2025, to be succeeded by Kevin Parekh, their current Vice President of Financial Planning and Analysis. Talk about starting a new chapter. Financial movements. Now let's switch gears a bit to discuss Apple's recent actions on the financial front. They've reportedly laid off about 100 employees from their services division, impacting the Apple Books app and Apple Bookstore teams. This follows previous layoffs, including hundreds from a now-closed self-driving car project earlier this year and the Siri annotation team. Despite these workforce reductions, Apple's financial health is robust. They posted a whopping $85.8 billion in third-quarter revenue, a 5% increase from last year. But before you start worrying about Apple stock, remember this. Daniel Loeb's hedge fund Third Point has doubled down on Apple, seeing the tech giant as under-owned by institutional investors. Apple stock has enjoyed a solid 22.4% rise this year and is up 26.1% over the past 12 months. So if you're looking to invest, Apple may still have some juice left, especially with upcoming AI initiatives under the Apple Intelligence banner, rolling out with iOS 18 this October. Quick bits lastly, a noteworthy mention. General Motors just roped in former Apple exec Tim Twerdahl to strengthen their software division. Big tech seems to be moving people like chess pieces, doesn't it? So there you have it. Apple is not just a tech titan, it's a master of staying relevant. From market share gains and AI innovations to significant financial moves, Apple continues to make waves. Keep your eyes peeled for that September 9th event, folks. It just might be glow time for the tech world. Stay tuned for more updates, and as always, keep geeking out. Hey tech enthusiasts, today we're diving into what's been buzzing in the stock market, specifically about Endava PLC, a company listed on the NYSE under the ticker DAVA. Endava has been making headlines, and not for the best reasons. Essentially, 3 major law firms have rolled out the red carpet for a slew of class action lawsuits against the company. Let's break it down. First up, Robbins LLP out of sunny San Diego is spearheading a class action on behalf of all investors who bought Endava securities between May 23, 2023 and February 28, 2024. The grievances are centered around Endava allegedly misleading investors about its financial outlook. The suit claims that key information was withheld, specifically that demand for Endava's services was falling off a cliff, and major clients were either pausing or outright canceling their projects. This lack of transparency led to a significant nosedive in stock price, dropping a whopping 42% to close at $37.17 when the company's less than stellar financial results for Q2 2024 hit the streets. Want to be lead plaintiff? Well, circle October 25th, 2024 on your calendar. That's your deadline to step into the action. Not one to be left out, the Portnoy law firm from Los Angeles is also advising Endava investors about a similar class action lawsuit. They emphasize that misleading statements and omissions about Endava's business prospects also bit investors hard. Make no mistake, this firm is giving plenty of avenues for investors to jump on this legal bandwagon. Just hit up attorney Leslie F. Portnoy, and they're ready to go to bat on your behalf. Their claim also highlights the same drop in stock price when Fiscal Truth saw daylight in late February 2024. And just in case you haven't had enough legal jargon for one day, Here comes Bragar Eagle and Squire PC from New York. This firm echoes the earlier allegations, fading demand for Endava's services and clients pulling the plug on projects, resulting in a notable dip in revenue. Their complaint, like the others, is serious about what they deem giving the market misleading signals. They also offer investors plenty of contact opportunities to ensure your voice get their day in court. These suits allege essentially the same core issues, but come from different legal powerhouses. Endava dropped the ball on transparency, painting a rosier-than-reality picture of their growth and prospects, and seemingly oblivious that the facade would break, leaving stockholders scrambling and, let's be real, a bit sore. What does all this mean for you? If you're an Endava shareholder who bought in between May 2023 and February 2024 and are now dealing with lighter pockets, you might be eligible to join these class action lawsuits. Whether you care deeply about corporate governance or just want to reclaim some financial loss, these law firms have every intention of painting Endava into a legal corner. So if you're looking to join the rally cry and pursue some legal resolution, don't sleep on those October deadlines. In a nutshell, Endava PLC's name splashed across today's news because of multiple class action lawsuits alleging they severely misled investors, resulting in significant financial losses. Talk about a tough day at the stock market office. Stay tuned, folks. This is one tech saga that's far from over. Hey tech enthusiasts, today's spotlight is on AppLovin, and there's a lot brewing around this mobile app technology giant. Let's dive into why AppLovin is making headlines. First up, we've got some buzz in the options trading arena. It seems investors with deep pockets are making moves on AppLovin stock. Our friends over at Benzinga noticed an intriguing trend today when their options scanner flagged 9 unusual options trades for App. This caught everyone's attention because, let's face it, when the big fish start swimming, it usually means the waters are about to get interesting. Breaking down the numbers of these trades, 6 were puts, amounting to a hefty $400,724, and 3 were calls, summing up to $194,010. Now, if you're scratching your head and wondering what this means, don't worry, I've got you. In the options world, puts often signal a bearish stance, meaning investors might think the stock will go down, while calls indicate a bullish stance, implying they believe the stock will go up. Interestingly, the overall sentiment of these trades is a 50-50 split between bullish and bearish. Digging deeper, we find that these whales, whether institutions or individual moguls, are targeting a price range of $50 to $150 over the last 3 months. This shows us that there's some major interest and liquidity at these strike prices, possibly setting the stage for some big moves in the stock's near future. But that's not all on AppLovin. In another noteworthy update, we look at how App is faring against its peers in the business services sector. Spoiler alert, it's crushing it. Year to date, AppLovin stock has surged about 126.6%, leaving the sector's average gain of 12% in the dust. This isn't just crossing the finish line, it's doing it Usain Bolt style. AppLovin's stellar performance is reflected in its Zacks rank, where it proudly holds the top spot with a strong buy rating. The Zacks consensus estimate for AppLovin's full-year earnings has jumped 17.6% in the past quarter alone, indicating that analysts are increasingly optimistic about its outlook. For context, the Zacks rank system is a tried-and-true method for spotting stocks with strong earnings potentials, making AppLovin's placement there even more noteworthy. Moreover, within the broader technology services industry, which boasts 171 different stocks, AppLovin stands tall. While its industry peers have seen an average gain of 21.8% this year, AppLovin's performance has been off the charts. Investors should definitely keep an eye on AppLovin, as well as MapleBear, another top performer in the sector. Both companies have shown not just growth, but sustained upward trajectories that are worth watching. So there you have it. AppLovin is making waves both in the options markets and in overall stock performance. Stay tuned, because when big money starts making moves and earnings forecasts look this promising, exciting things are bound to happen. Hey tech enthusiasts, let's dive into why Shopify is making waves in the tech world today. First up, a massive financial maneuvering caught everyone's attention. Deep-pocketed investors are showing substantial interest in Shopify's options, signaling something big could be brewing. Benzinga's options scanner flagged an incredible 20 unusual options activities today. Just to break it down, options are contracts that allow you to buy or sell a stock at a specified price before a certain date, a riskier yet potentially more lucrative alternative to just trading stocks directly. What's surprising here is the sheer volume and value involved. These heavyweight investors, often referred to as whales, are betting on strike prices ranging from $65 to $90. Interestingly, 45% of these trades are bullish and 45% are bearish, with the rest being uncertain. There's $770,573 in put options versus a whopping $3,104,721 in call options. This balanced sentiment can suggest varied expectations among market movers, but such significant interest typically hints that major moves could be on the horizon. So if you're following the markets, keeping an eye on Shopify might be a smart move. Moving on, let's talk about why Wall Street is buzzing about Shopify and why you might want to consider investing in it. Shopify reported stellar performance in Q2, with revenues skyrocketing by 20% to hit $2 billion. Their net income didn't just grow, it exploded by 94% to reach $345 million. Much of this growth sprang from subscription software sales and steady growth in merchant services. Shopify is clearly on a roll, leveraging its market leadership in e-commerce software to expand even further. Did you know Shopify merchants represent 10% of online retail sales in the US and 6% in Western Europe? That's a significant chunk of online commerce. With an estimated addressable market of $849 billion, Shopify is well positioned to capitalize on countless business opportunities. They're also investing heavily in sophisticated tools and features targeted at larger brands, driving a notable uptick in gross merchandise volume from wholesale commerce features by 140% in just one quarter. Wall Street predicts Shopify's sales could grow 21% annually through 2027. Considering their current valuation, Shopify appears to be not just a strong performer, but also a solid long-term bet. Investors looking ahead and seeing the potential for significant returns over the next few years might find Shopify a lucrative option. So, what do you think? Are you feeling bullish or bearish about Shopify's future? Do you think these moves signal a golden opportunity, or are you more cautious about the risks ahead? Let us know in the comments below. Share your thoughts, your insights, or even your predictions. Your engagement makes this tech community vibrant and informed. It's always exciting to hear what you all have to say. That's it for today. Stay tuned, stay smart, and keep those comments coming. Hey tech enthusiasts. All right, let's pick one stock from today's lineup and give you the lowdown. Apple. Should you sell, buy, or hold? Drumroll, please. I'm saying buy. Why? Let's break it down. Market share rising. According to IDC, Apple's poised for a market share boost in 2024, particularly in luxury segments and emerging markets. The forthcoming iPhone 16 and advancements in generative AI tech are huge catalysts here. If budget Android phones have ruled niche markets, Apple's high-end Gen AI smartphones could pivot that dominance. In China alone, Apple is expanding its network and opening new stores, making significant inroads. iPhone 16, the game changer. Apple's upcoming Glow Time event on September 9th is anticipated to trigger a historical period of iPhone upgrades, according to Wedbush analyst Dan Ives. With 300 million iPhones ripe for an upgrade, and AI features enhancing Siri, this launch may propel Apple to new heights. Plus, if 25% of the world could access AI through an iPhone, that's a monumental shift. Financial movements. Even with layoffs, Apple's financial resilience is notable. They posted $85.8 billion in third quarter revenue, a 5% increase year over year. Daniel Loeb's hedge fund Third Point doubled down on Apple, seeing the tech giant as under-owned by institutional investors. Apple stock has already enjoyed a 22.4% rise this year, and with fresh AI initiatives and iOS 18 coming in October, the potential for growth is compelling. Leadership changes. CFO Luca Maestri stepping down, with Kevin Perek stepping in, represents a new chapter. Leadership shakeups often accompany fresh strategies and renewed vigor. The transition should only bolster Apple's forward momentum. Quick bits. Tim Twerdahl to GM. If Tim Twerdahl's shift to GM reflects anything, it's how valuable Apple's talent is recognized industry-wide. Apple's influence extends beyond its products. Its people are often the movers and shakers setting trends. The bigger picture. Given all this, Apple is not just a company, it's a trendsetter continually revamping its playbook. Rising market share, game-changing tech, solid financials, and strategic leadership transitions are all green lights. But remember, always do your own research. Dive into the numbers, read up on analyst reports, and understand your own risk tolerance before making any investment. Markets can be unpredictable, and what's right for one person might not be right for another. So there you have it, my 2 cents on why Apple is currently worth a buy. Let me know what you think in the comments. Are you in agreement, or do you see it differently? Your feedback makes the tech community vibrant and informed. Keep those thoughts coming. What a whirlwind day in the tech market. Apple is gearing up with some major moves in China and prepping for the highly anticipated iPhone 16 launch, all while shaking up leadership. Endava PLC is in the middle of a legal storm with multiple class action lawsuits from heavyweight law firms. AppLovin is catching the eye of big investors in the options market, while also dominating its sector performance. Shopify is on fire with surging revenues and a stock that everyone's watching closely for its future potential. Remember, if you enjoyed today's breakdown, don't forget to like, subscribe, and share this video. Hit that notification bell, and join us again tomorrow for another exciting tech news roundup. Stay curious, stay savvy.